Finally, I think as we're coming to the end of our time here, this is a fantastic general question asking, what are you most optimistic about generally, globally, in the market? And then what concerns you in the same way?
It's interesting question and great question. It might be the same it might be the same thing. So one thing that has me very optimistic and very concerned is that for a year, I think we were very fortunate because I recognized immediately this is the third crisis that I've been investing through professionally, and I recognized immediately that the actions being taken had key components that were different. So, in the financial crisis, for example, all this bailout money went to banks, but they had a lot of trouble lending it. Milton Friedman used to talk about M1 and M2 capital being like the key lever to really stimulating the economy. So that's money that goes directly to people, but they didn't really know how to do it. And this time around, they just printed money and mailed out checks. And they have put the Fed, the Treasury, and Congress has put so much money and stimulus into the economy. I don't think we're in like the beginning stages of an economic recovery, but there's just money everywhere. And so, although we have like reasonably high, I think by any standard, you say, well, the market's kind of high, but it's like 22 times earnings, maybe. And we're in a zero interest rate environment. So, if you invert that, you get like a somewhat like a 4 to 5% earnings yield on stock. That's actually the right amount. If treasuries are giving you 1.5, you get like a 3% risk premium. Now you're at 4.5. So it's like the prices are actually right. And the economy is growing so strongly and so well. I'm very, I understand that this pandemic has hit all sorts of people in all sorts of different ways, and it's been devastating. But from an economic perspective, I think that the US and some other governments, economically speaking, have actually handled it they've handled it really well. And it almost in a surprising way. Now, I know there's concerns about it. It's like, why are we mailing all this money? And that's the flip side of all of this is, for years, actually, for many years, I was saying, where's the inflation? Inflation is supposed to be here. And suddenly we haven't seen it. There's been no inflation. And the Fed has been trying to create inflation. Uh, and it seems improbable that you could dump this much money onto an economy and not see inflation. But there are smart people on both sides of this aisle that basically are arguing back and forth about deflation because of demographics and inflation because of stimulus. And, I don't think it's knowable. So it's a very interesting debate. I think that the economic recovery that we're seeing in the US has me very optimistic. Our portfolio has me very optimistic. The firms that we own are doing extraordinarily well. And, but my biggest fear is that for political reasons, we struggle to raise interest rates. I don't want to see really high interest rates either, but we struggle to raise them. And then we end up in a situation where the Fed's behind the curve on inflation. And if we get, 8, 10% inflation, we're back to the Volcker years in the 70s. And now we have to counteract that with really high interest rates. If that were to happen, it would impact things because interest rates are like gravity. So when interest rates are low, asset prices can be high. But when interest rates go high, people would rather own a bond than equity. And so equity, the yield, the earnings yield on equity has to increase, which means the price would have to be lower. That said, so inflation is the fear, and stimulus keeps us optimistic. So, and it's the opposite side of the same coin. And the outcome, ultimately, I want to just be clear, you have to do this bottom-up analysis of individual securities to get around this. So you have to ask yourself, will Daily Journal be impacted by high inflation? And of course, at the margin, the answer is it will be slightly, but because of the management teams running it, and specifically because of things that I know, like in these contracts, so they're writing contracts, they're doing a SaaS model for these government agencies, courthouses around the nation. In each of these contracts, they have a KPI price inflator. So if inflation goes up 10%, the price of the contract goes up 10%. So in reality, inflation won't impact Daily Journal the same way that it would impact like an OEM manufacturer, like a GM or Ford. Inflation would hit those types of businesses much harder. Inflation would hit things like restaurant owners much harder, especially like high cost of labor. Probably see some wage inflation. So you can sort of sidestep some of the problems, but the fear overall is inflation, and the current stimulus and the way the economy is moving has me very optimistic.
I recently read some of Buffett's letters from the 70s during the time of high inflation, and he said that the things to look for in companies during that kind of economic situation are low debt and an incredibly strong moat in which a company can raise its prices commensurate with the inflation and perhaps beyond, which is what you just described.
That's right.
Very interesting.
Yeah.